Teresa Barger, co-founder and senior managing director at Cartica Capital, joining us this morning. Teresa, pleasure to have you with us, especially as we wind down 2019. Still, of course, rife with all kinds of news. Want to start by asking, what's really happening in the world right now? There are global commentators like Ray Dalio, like Howard Marks, who are surprised with the strength of the U.S. economy and where the U.S. markets continue to trade. What's your read of the situation? Do you think the party is here to stay?
I don't think it's here to stay, partly because in the U.S. We have seen profit margins growing, largely because of a lack of regulatory enforcement and because of pricing power from companies that are very large, maybe oligopolistic, and we've had the lion's share of our EPS growth coming from share buybacks. This doesn't seem sustainable to me. Not to say that we're going to have necessarily a big crash in the economy, but from the stock market point of view, I think it is unsustainable to have a market that's so driven by share buybacks and what's essentially oligopoly profits.
So, just like the trade war dominated the better part of headlines of 2019, do you think 2020 is going to be all about the U.S. presidential election? Who do you think will be the next president of the U.S.? Or rather, how much of a chance do you feel Trump has at it once again?
I certainly hope not, because we know that is a very boring kind of tug-of-war to watch, with very little resolution, lots of noise through a very long time, but no clarity until we get close to October, November. And of course, we might not even have clarity then. So I hope it's not. But I do think that it may be about a more benign global growth picture. I think it also may be about a more benign dollar from the point of view of international investors. We see the dollar either staying the same or getting weaker over 2020, which would be positive for investors in markets overseas. I also think that it might be a year where we see a few things getting more steady, like the oil market. We see that as pretty steady for the year, which I think is very positive for India.
The way you invest is you look at companies which have good return ratios, you buy them, you hold them. Now, some would argue that it's the right thing to do, but some of the stocks which you've owned in the past, Eicher Motors, Cholamandal, Berger Paint, they're terribly, terribly expensive. So how are you investing in this market where what you like is expensive and what is cheap you don't like?
Yes, so I think India is very difficult right now with PEs at 18.5 times, but basically almost no EPS growth. And that's really hard to buy that. On the other hand, there are many companies that have been left behind in India. And I think that 2019 has been the year of dumb money, where you've had a pretty good run for the Sensex, but only with a few stocks, because the smart investors who are the local asset managers, mutual funds, local investment firms have been more or less on the sidelines. They haven't been as active, haven't been the marginal investor as they have in past years. And perhaps in 2020, we might see a change and some smart money come back into India. Because otherwise, it's a little hard to buy fresh companies now when you don't see EPS growth in front of you.
So are you looking at increasing or maintaining your exposure to your good old RBL banks or Eicher Motor Chola Shree for next couple of years?
Well, we love India for the very long term, for the big themes that India has and no one else has, lots of growth, millennialization, formalization, premiumization, all those great things. But for 2020, we see it in a cyclical downturn, not a structural downturn. exacerbated by the noise that has come from the reforms. So it is a country we'll probably lighten up on and certainly not go heavier on.
Teresa, hi. I wanted to understand what you make of the slowdown in Indian companies. Do you think that you describe it as cyclical in nature or structural in nature? Or are we looking at a reboot in Indian growth at the consumer level and the corporate level? What's the view on the big picture?
We see it as a cyclical slowdown. Now we've all had the urban and rural issues. Very unusual to find food prices going up with that not translating into profits for farmers. However, the newest numbers that have come out from April to November look like there might have been a rise actually in the profits for farmers. So maybe we'll see that turning, but we don't see any positives on the urban side. So right now, at the very moment, not much to see at the rural side, although maybe some brightness on the horizon, but no brightness on the horizon for the urban side. We would love to see real economic reforms take place in the second Modi administration. Obviously, we're not in India, so these social political activities like Kashmir, the immigration law, those things are, to us, don't get to the core of the Indian issue, which is creating more jobs for the people entering the workforce in India. So it does not give us any joy. Real economic reforms absolutely would. And I'm not seeing that on the horizon, and I'm not seeing any green shoots on capital expenditures on the horizon.
Now, let me ask you about your take on telecom, very contentious sector. You do like the consumer market in India. You like to buy big consumer businesses in India, which is not in a downtrend, but the environment, which is sometimes in a downtrend. So at the current juncture, would you be interested in looking at the telecom sector? It's something which you haven't invested in a long time.
Yes, I think it's right now it's quite a difficult time and a time of regulatory change. And so I think I would rather invest in companies which are beneficiaries from the fall in the price of price of data coming over to people's cell phones. So this probably we would go with a new economy rather than investing in the telcos themselves. I think probably those who are closer to the regulatory situation might be able to find investments to make there.
Okay, Teresa, let's just recap for the benefit of our viewers. You've bought Eicher in the past, Chola, Shree Cement. You also have a deep understanding of private banks like RBL that you bought in the past. But given what's happening to interest rates, to disclosure norms, and how some of the banks have recently conducted themselves, what's your view on the way forward on how private banks are moving? Do you think that the current decline is an opportunity to revisit some of your good old favorites?
Well, I think it is true that their market got spooked, obviously, first by ILNFS, which created a liquidity crisis that then created a credit crisis, particularly for the likes of Yes Bank. We then had some very specific incidents that made people question what might the whole book look like for other banks. Now, we have great faith in RBL Bank and think that they've been unfairly tarred with the same brush of Yes Bank, which we think is an inferior bank and has always been in terms of its credit quality and the quality of its management team. So there are some opportunities, I think, to buy things in the financial sector which have very sound management and have a lot of runway for growth once this liquidity, this credit situation has calmed down. So there are pockets that one can find. But just I might add, we need the government and the RBI to really take very seriously the unclogging of the transmission mechanism to get credit flowing again to Indian companies and particularly to SMEs. That's a big plea from Cartica to the government of India.
So I wanted to understand the whole idea of return now. Capital reversion is the biggest truism of stock market. In some of the stocks which you own, and we've discussed the names here, they're in the public domain. So I'll take the liberty of saying them again. Shree Cement, Chola, Barger. They've given you fantastic returns for the last couple of years. Do you think in the coming decade also, this kind of a return should be expected or anticipated?
I don't think that in our era that's ever going to be true. There is a very small subset of stocks that are true compounders. But one of the ways to go astray as an investor is to call a company a compounder that is not truly a compounder. They're very rare animals. They're lovely when you can find them, but there's so much going on, so much upheaval in the economy, so much creative destruction that I think you always have to look at what is new in the economy and how consumption patterns are changing. They can change enormously quickly. Actually, if you don't mind, I'd like to give you a little example of that. In the last 18 months, over the whole globe, globally, the sale of beauty products has come down. And it's been a global phenomenon. It's not just one country. And when people who specialize in this look at what the signals are among consumers, 18 months ago, they were about glamour and they were about selfies and about looking perfect. Now the conversation is about toxicity of images and has completely changed and affected the global beauty market. So fascinating. We as investors have to be very much on top of what's going on from Gen Z all the way to people who are in hospice care. It's a different market every day.
You've given me something to really think over it, that how the beauty product sales are coming down, how conscious the millennial crowd is getting. So let's talk about something what not millennials are focusing on, but what perhaps the old timers are focused on, which is that you focus on big trends. 1980 was dominated by Japan, then came the TMT boom and the bust. China took over the first 10 years of this decade, and last 10 years has been all about America and American economy, American financial markets, American unemployment, and the birth of behemoths like Amazon, Google, and even Netflix. So if you have to put your mind to something what could be called as a multi-year theme for this decade, what could be that theme?
Oh, I cannot be in the business of predicting what's coming in the next decade. The only thing I can predict is change, and it will look very different from today. But using a little bit of a shorter time frame, I think we have to look at the tension between the U.S. and China as being a trend that's here to stay. And we are going to have to look at demographic shifts that are going to be difficult for countries like China, like Russia, like Brazil, obviously Japan, Korea, and be more positive for a country like India. So over some period of time, I think really have to go with the demographic story. In the shorter period of time, I go with the political story.
Okay, and the list of stocks which you've owned for a long time, and we've talked about them, in terms of the theme which you're now following, will the core change at all for the India portfolio?
Sure. I mean, it's already changing. I think that the new economy theme is a much bigger theme for us, and that would include the adoption of new economy techniques in existing companies as well.
Teresa, from insights into what's going on in terms of consumer behavior to your view on the markets to individual stocks, thank you for sharing with us your outlook on ET Now.